Well, as expected, the Bank of Canada, the BOC, dropped the overnight rate by 50 basis points or 0.5%. So what does that mean? Well, don't get sucked in thinking that now the interest rates are going to start plummeting. So my name is Michael Keogh, Team Keogh at REMAX, and thanks for stopping by our channel. Please hit the subscribe button down below if you'd like to stay up to date on all local and Simcoe County real estate information. Hit the notification bell if you don't want to miss one single episode. And remember also to click the like button if any of the information I have provided has been beneficial at all. And by clicking that, it's one of the things that can help people searching for information on the Bank of Canada rate to easily find that. So 0.5% rate drop, what does that mean? Well, consumers are a little bit confused with the overnight rate, the variable rate, a fixed rate, home equity lines of credit, all of those things. It's a confusing mess. So I came across a video yesterday from a meeting that I was at from Alain Lavoie from Capital Home Lending, and he does a great job in explaining the differences and what basically is happening. So take a listen.
Last Bank of Canada meeting was a potential cut. There will be a cut tomorrow. So, anyone's suggestions are a quarter point, a half point, 3/4 points, who knows? We're probably going to land somewhere at a half point, which will be great. And there's probably going to be another announcement in December with another decrease, right? So, and then they're suggesting throughout 2025 more decreases. But a lot of the misconception that consumers have is, the media is doing a great job of saying rates are going down. But what they don't understand is fixed rates and variable rates. There's such a huge spread right now. So although variable rates are coming down, fixed rates are sort of maintaining, right? There's a lot of catch up that needs to be done with the variable and the fixed rates, right? But to that point, they do understand that rates are coming down. So there is a little bit of a customer confidence coming up, right? So this is why we're seeing a little bit of a spark in some of our segments, which is great. But historically, 5-year money, if you're looking at fixed versus variable generally outperforms. If you're going to look at it over the last 40 years, right? There's a handful of times that fixed rates do outperform, and we're actually in that segment right now.
Great information. Thanks, Alain. Hopefully that clears things up a little bit with you for the difference between the different rates that are out there. But what does this all mean with respect to real estate? Well, I don't think this announcement is going to start a flood of activity, that the pricing wars and all that other stuff. You may see a little bit of an uptick in activity in some of the more high demand areas because people are having a little bit more confidence. But overall, the market's been pretty steady all year. Prices have stayed pretty solid. I do think that maybe buyers are going to start to get a bit more confident, maybe feel a little bit safer out there. So maybe be willing to start stepping into the market, start looking at some neighborhoods that maybe are of some interest to them, and start to educate themselves onto where value truly is. Now, with another announcement coming out in December from the BOC, that could allow buyers to feel even more confidence. And at this time, I think we may see a little bit more of an uptick in the market, and maybe, we'll call it a late fall market as a result of that. Remember, it wasn't that long ago that interest rates were at over 6%, and now you can see 3.99 for fixed rates. Now there's probably loads of conditions and everything with that, but you can see the big difference from 6.2 to 3.9 or 4%. So buyers now have more purchasing power, which is really cool. And now does that open up the market to more people to be able to come into the market? Kind of an interesting thought. Now, more people will qualify for homes. That's a great idea as well. But I don't think it's going to start this flood because people still aren't quite there with respect to confidence. So there is another comment here. So what happens now with this announcement? How is that going to affect fixed and variable rates? Is that gap going to close? And Alain has some more things to say about that.
Great question, Drew. They don't follow each other. Fixed rates are attached to the bond market, variables attached to the key lending. So a lot of people have the misconception that variable rates coming down, fixed rates are coming up or are going down as well, right? I think what's going to happen is there was a little bit of a drop in the bond market, and this was huge. That with what happened with the U.S. Feds, they dropped 50 basis points a couple of weeks ago, and Canada's bond rates came down. So what we've seen is the bond rates come down, which affects the fixed rates, which have been sort of stagnant for the last little bit. So the media's done a great job of saying rates are going down, rates are going down. But what really is going down is the key lending rate, right? Like fixed rates are sort of sitting at 4.5%, right? The key lending is at 6.5%. So a 0.5% drop, 6% versus 4%, there's still a lot of room that the variable does have to come down.
Yeah.
Thanks again, Alain. Now, as I said before, I don't think this announcement is going to have a huge impact on the market. I believe we'll see maybe some increased sales in some areas, but other areas will stay just the same. This may not happen until we see the next announcement in December. I think this is just going to give people a little bit more confidence heading into the winter, into 2025, that maybe there is a possibility that I may be able to own a home someday. Anyway, guys, if you want to book a call with us, click the link down below and we'll get talking to you whenever you're available. Have a great day.